In a groundbreaking move, the U.S. Securities and Exchange Commission, SEC, has approved 8 spot Ethereum ETFs in an omnibus order, marking a significant development for the cryptocurrency industry. This approval comes after a flurry of activity and engagement between the SEC and ETF issuers, surprising many industry observers and analysts. The SEC's approval of 19B4 forms for the ETFs involves major financial players such as BlackRock, Fidelity, Grayscale, Bitwise, VanEck, ARK, Invesco Galaxy, and Franklin Templeton. These forms are necessary steps in the regulatory process, but ETF issuers must still have their S1 registration statements go effective before trading can commence. The SEC has begun conversations with issuers about these S1 forms, although the timeline for this process remains uncertain. Some analysts speculate that it could take weeks, while historical precedents suggest it could stretch to 3 months. James Seifert, a Bloomberg ETF analyst, noted, "I think that if they work extremely hard, it can be done within a couple of weeks, but there are plenty of examples of this process taking 3-1 months historically." The approval of these Ethereum ETFs was unexpected, given the SEC's previous lack of engagement with issuers. This sudden change of direction has led to speculation about the reasons behind it. Some sources suggest it might be politically motivated, as indicated by a bipartisan group of House lawmakers who urged the SEC to approve the ETFs. They argued that the approval would demonstrate consistency in the SEC's application of its standards following the earlier approval of Bitcoin ETFs. As anticipation for the approval grew, the Grayscale Ethereum trust discount shrank significantly from 24% to 6%. Converting the trust into an ETF will allow holders to exchange their shares for the cash value of the underlying Ether, providing a more straightforward investment vehicle. The approval of Ethereum ETFs could potentially transform the market, although their success might not mirror that of Bitcoin ETFs. Since the approval of Bitcoin ETFs, they have accumulated an additional 207,000 Bitcoin, approximately 14 billion, on top of the 621,000 Bitcoin, around 42 billion, held by the Grayscale Bitcoin Trust at its conversion. However, Bloomberg ETF analyst Eric Balchunas estimated that Ethereum ETFs might garner only 10 to 15% of the assets that Bitcoin ETFs have received, projecting a total between $5 to $8 billion. Despite being smaller, this would still be a significant achievement for any new financial product in its initial years. ETFs. They argued that the approval would demonstrate consistency in the SEC's application of its standards following the earlier approval of Bitcoin ETFs. As anticipation for the approval grew, there are 2 main reasons for this. Pre-approval speculation, crypto commentator Zach Rines suggests that many investors had already bought ETH in anticipation of the ETF approval, causing the price to surge by 29% in the previous week. This preemptive buying meant there wasn't a significant influx of new buyers post-approval. Pending launch and regulatory approvals, although the ETFs are approved, they still need an S1 filing approval to launch. This process, including the amended filings like VanEck's, could take weeks to months. Significant price movements are expected once these ETFs start trading and bring in new capital inflows. Historical data shows that Bitcoin experienced a delayed price surge following its spot ETF approvals, suggesting a similar pattern might occur with Ether. Additionally, there are concerns about potential outflows from the Grayscale Ethereum Trust, ETH, converting into a spot ETF, which could offset some of the expected inflows. Despite these factors, some experts believe that ETH is currently undervalued and anticipate significant capital inflows once the ETFs officially launch. The SEC's recent approval of a rule change to allow the creation of Ether ETFs marks a crucial shift in the regulatory landscape. This decision follows the SEC's approval of Bitcoin ETFs less than 6 months ago, which have already seen substantial success with net inflows surpassing $12 billion. The timing of the Ether Fund decision coincided with a deadline for the VanEck Ethereum ETF, further highlighting the SEC's evolving stance on crypto assets. Despite the approval, the market reaction was modest, with the price of Ether rising just 2%, though this followed a 20% surge earlier in the week. Investors remain cautious as the SEC's order approves the applications from various exchanges to list the funds, but does not guarantee their immediate launch or set a trading date. Richard Kerr, a partner at K&M Gates law firm, emphasized that the approval does not extend to other digital assets on the Ethereum network. This delineation underscores the specificity of the SEC's approval and the careful regulatory approach towards different crypto products. Future prospects. The Ether ETFs are expected to be smaller compared to their Bitcoin counterparts. For example, the Grayscale Ethereum Trust holds about $11 billion in assets, which is significantly less than the firm's Bitcoin fund before its conversion. Additionally, the lack of staking options in these ETFs, due to SEC allegations against staking-as-a-service offerings, may also limit their appeal. Stephen Lubka, managing director at Swan Bitcoin, suggested that these structural differences make Ether ETFs less attractive, predicting lower inflows compared to Bitcoin ETFs. Nonetheless, the approval of Ethereum ETFs signals a potential softening of the SEC's stance towards cryptocurrencies following a series of legal battles and regulatory scrutiny. This development could pave the way for more crypto-related financial products, providing investors with diverse opportunities to engage with digital assets. The SEC's approval of 8 Ethereum ETFs represents a milestone for the cryptocurrency industry, reflecting both the growing acceptance of digital assets and the complexities of regulatory oversight. While these ETFs may not achieve the same immediate success as Bitcoin ETFs, they mark an important step in the broader adoption and integration of cryptocurrencies into mainstream financial markets. As the regulatory landscape continues to evolve, the future of crypto ETFs will be closely watched by investors and industry stakeholders alike. And that wraps up our coverage on the potential approval of the VanEck Spot Ether ETF. If you found this video informative, make sure to hit the like button, subscribe to our channel, and ring the bell to stay updated on all things crypto. Thanks for watching, and we'll see you in the next video.